our core business is foreign exchange and precious metals, and we deal with about 40 institutional customers and about 16 of the largest banks in the world. And really, I guess the origin or the provenance of the idea of Definity really came from reverse inquiries. Essentially, clients of ours saying, "Hey, we love transacting FX and gold on your platform. Can you do Bitcoin?" So what we did was we built an infrastructure and we copied and pasted from TradFi. So we were the first people to bridge essentially bank credit to allow the use of those credit lines to trade digital assets on our platform. So if you have a prime brokerage facility with the bank we partner with, it's one of the largest European investment banks, you can immediately, within about 20 or 30 milliseconds, transact on our platform and you can trade crypto. And essentially the way in which it works is you trade during the course of the day. We net settle all the trades at 5 p.m. London, essentially. The approach we've taken with really the entire market is to say, look, are there issues or structural problems that we can fix? And that's really been our go-to market. What is it that's wrong with the existing market? How can we fix it? How can we make it more efficient? And what we've seen is there's a lot of businesses that are, I guess, maybe you could consider them rivals. Maybe they're trying to do similar things. I don't really know. But typically what you'll find is they're fixing one component of a much bigger macro problem. So for instance, they might offer a super low latency tech solution for executing trades, but then they may not settle trades. Settlement of trades is a massive issue. So what we did was we did a full drains up analysis and said, okay, cool. We know that FX is the biggest market in the world. We know it trades 7.7 trillion a day. We know it's very efficient. We know it's very, very good. How do we look at the crypto market today? And what are the potential opportunities for streamlining its operations? And what we found was there was some huge issues. One of the biggest issues we saw was on fiat on and off. Again, we've remedied that because, again, we're able to do very large tickets for fiat on and off. The other one we found was deliverable FX. So again, because the attitude of a lot of banks, publicly certainly, has been they don't really want to deal with anyone trading crypto, it's actually very difficult for counterparties to transact, for instance, euro dollar. So we came along and said, well, you know what, we've got 16 banking relationships. I wonder whether we can fix this using some of our liquidity. And the answer is yes, we can. So we fixed that issue. The fiat on and off issue we fixed, the deliverable FX issue we fixed. We have a partnership with a Luxembourg-based bank called Como that are crypto friendly. So again, if you're having issues with banking, which I think a lot of people do, then we have a solution. We can introduce you to Como and you can get multi-currency IBAN set up for your transactions. One of the other issues that I saw being quite problematic was really crypto borrowing and lending. So again, obviously up until quite recently when they filed for Chapter 11, Genesis, the largest player in that market. Prior to that, Celsius were pretty huge, but obviously, Celsius is slightly different. That's a slight degree of fraud and misuse of funds, but certainly Genesis, I think, was a decent counterparty. Now, who's the biggest now that's operating? You've got Nexo, I guess, is probably, and again, they're a decent offering. I guess a very simple way of thinking about the Repo market is that it's essentially pawnbroking for banks. You have bonds, you want cash, you pawnbroke your bonds for the cash, and then you repay either overnight, 7 days, 30 days, typically. I was having a coffee with a pension fund manager who was telling me that because he was looking for better yield, instead of doing investment grade bonds, he was now looking to enter into repo trades for junk bonds. And I said, okay, why would you do this? He said, well, because I'm being paid a yield of 6.75%, 7%. Now, if you think about this logically, what is the largest junk bond that exists today? It's probably the Ford Motor Company senior loan note that pays a coupon of about 6.5%. And that has got a market cap of about $7 billion. Average daily volume is probably 200, maybe $300 million. It's not huge. And I thought, hang on, so you're willing to take that risk with this loan note that Ford will default on should anything happen. Why would you not be willing to take a risk on Bitcoin with an 850 billion market cap and 40 billion of average daily volume? And also, by the way, the haircut on the Ford Motor Company senior loan is about 5%. Well, at the moment, most platforms, it's about 40% in terms of Bitcoin. And the response was, wow, what would the coupon be? And I said, I don't know. It depends on market demand. It could be anywhere between 8, maybe 9%, maybe a little bit higher, depending. That was the point where we kind of thought, hang on, is there something we can do here? Could we use the existing infrastructure of the repo market to add liquidity to crypto? And the answer is yes, we can. So that's kind of one of the things we've been working on. And again, look, this is not a very easy solution. This is a bloody complex market, and I'm not going to make any bones about the fact this is something that's quite challenging. But in the same way that we were able to essentially use existing prime brokerage documentation to enable TradFi to access digital assets, I'm very confident we can do exactly the same thing, use the exact same infrastructure that exists to add liquidity to crypto. So what it does is brilliant because it adds liquidity to the crypto market without actually those counterparties, those pension funds who ordinarily would never be able to hold crypto, actually being able to benefit economically from having exposure to crypto without physically touching it. So I think what it does, again, it adds another element where let's say a typical pension fund manager would probably never be interested in trading Bitcoin or buying and holding Bitcoin. But actually, if you offer them a 9% yield, they'll probably look at it and go, you know what? On a risk-adjusted basis, actually, that maths makes sense. I would probably do this. So this is another mechanism I think that I think is going to be a bit of a game changer. Let's say that you hold the Ford Motor Company senior loan note and you need cash for some reason. You can essentially go to the repo market. You can say, here's my collateral, and people will lend you money, and they'll charge you 6.5%, let's say. So you pay 6.5%. So if I'm a fund manager or if I'm a pension fund and I think, okay, I'm happy taking this risk. Worst case, this guy doesn't pay the money back. I don't really care. I can sell the bonds. I can get my money back, right? Same principle, but instead of using the Ford Motor Company senior loan note, which by the way will have a 5% discount to market, so it doesn't take a big market move before you're underwater. My idea was to say, well, hang on. If you're willing to take this risk on and by the way, that's the most liquid junk bond in the world. The majority of the junk bonds that people trade have got market caps of less than $1 billion, an average daily volume of less than 50 million. And if you're looking to liquidate a big position, good luck with that. It's not going to happen. So the view I took was to say, why don't we take the most liquid digital asset in the world, where you can trade it 24 hours a day, 7 days a week, and have a very, very large haircut. So let's say 40%. And again, look, day one it'll be 40%. As the market becomes more efficient, as you have more liquidity come in, those haircuts are going to become compressed. And my goal and my ambition is to kind of get them back towards maybe 10% or so, which I think is reasonable. So it's more capital efficient. But effectively, what you'll do is you'll have the Bitcoin as collateral. That counterparty that has the Bitcoin will then pay, let's say, 10% to borrow fiat for 30 days. At the end of the 30 days, they need to basically pay back the actual notional plus the accrued interest for that period. And they get their bonds back, their Bitcoin back. Sorry.
The person on the other side is perhaps even in a more protected position than they would be loaning against Ford Motor Company's bonds.
Yes, they would be, because they have far more comfort. They have far larger cushion. Because I think if you look at the relative volatility, obviously Bitcoin is a hell of a lot more volatile, but it's only 2.5 times more volatile than the Ford Motor Company senior loan note. So it's not orders of magnitude of 5 or 10x. It's 2.5 times. I think that's reasonable from a risk perspective. And actually, you're taking probably, what are you taking? Rather than 5%, you're taking, let's say, 40%. So you should be comfortable that you've got several 100% more headroom in that market. Yes, it's more volatile, but you've got exponentially more headroom to play with. And I think as liquidity comes into this market, what you're going to see is those haircuts are going to reduce. It's not going to be 5%, obviously, because it's still bloody volatile. But I think, give it 12 months, you'll probably see that go from 40% to 20% and maybe even 10%, which I think makes it very efficient.